Welcome back to Rockstock Channel. It is Thursday, December 4th, and I'm here with Matt for our weekly Rockstock recap episode. But also on the back end of this video will be a discussion that I moderated at the 121 conference 2 weeks ago when I was in London. That includes QTWO Metals as well as NOA Lithium. QTWO will also comment. Matt had an amazing drill hole yesterday, and they continue to trade at 52-week highs. But before we do that, just want to reference, we will talk about some stocks that we may advise, companies we may advise, stocks we may own, but nothing in this video should be considered investment advice. It's for educational purposes only. Please read the disclaimer at the end of this video and do your own research. And I'd also like to thank our sponsors, Lithium Royalty Corp., which is traded on the Toronto Stock Exchange, ticker symbol LIRC, and holds more than 30 royalties on hard rock and brine projects such as Core Lithium in Australia, Sigma Lithium in Brazil, and TreQ and Mariana projects owned by Zijin and Ganfeng in Argentina. And USCF Investments is a pioneer in commodity ETFs for nearly 20 years. Their 15 funds include single commodity exposure, broad diversification with SDCI, and themes like ZSB for battery metals and USG for gold with income. To find out more, watch our inaugural episode with their CEO, John Love, and visit uscfinvestments.com. So, Matt, I think we have a docket here. I just listened to Rio Tinto's strategy day where they outlined their lithium plans and strategy and introduced a new CEO of that division. So let's start with that. And there was also significant news out of Europe as it pertains to lithium. So I want to talk about that as well. But actually, I just want to flag one other thing. We did do an interview, which we would recommend you're watching, with something new in phosphate, which is highly relevant for the LFP battery chemistry. So look at that interview with the CEO of First Phosphate. We'll flag up the thumbnail here as something, and maybe you can talk about that a little bit as well. But first, I just posted a tweet about Rio's strategy day, and I wrote, the market they see growing from 1.4 million tons in 2025, to 4.5 million tons by 2035, right? So that's a 13% CAGR, but that's, nearly more than 3 million tons needed over the next 10 years. That's equivalent to 300,000 new tons a year, but it won't be, averaged over that, period of time.
And then the first point I would make on that is that's actually slower than my forecast. Demand growth for the industry. So they're talking about 13%. I'm quite conservative, I would say. I'm talking about 15 or 16%. So and that obviously makes quite a substantial amount of difference, even 2 or 3%, given the mining industry's record in terms of being able to add new supply over a 10-year period. I've never known the industry to be able to grow at that sort of rate over a 10-year period.
Well, another interesting comment here is that they're saying this year the market's 1.4 million tons. You were saying, Matt, that there's no agreement as to what the size of the market is at present. I thought the market this year was 1.7 million tons.
and I mean, that is really the problem, that I flagged in the last call, because nobody really knows what the size of the market is. And until we can agree what the size of the market is, it's really difficult to say which rate it's growing at.
Great. Okay. So going on, they said that at current $11 a kilo spot prices, something like 65% of new projects by 2030 are not incentivized. And they have a chart which they showed, which was not like a traditional cost curve chart with existing producers. It was a cost curve chart of projects that they think are probable based on permitting and financing. And, it shows 11,000, and eyeballing it, it looks like, only about a third of the projects are economic.
Damn, bullshit. I was going to go and do one of those, but obviously Rio's already done it for me.
So they said key areas to monitor are the pace of the energy transition. And notably, as a bullet point, they said hard rock supply is an area to monitor. A lot of what they said in this discussion was very brine focused, although they are going ahead in Quebec with their Bécancour hydroxide conversion plant. They haven't yet decided whether it will be Whabouchi or Galaxy that will feed that hydroxide conversion plant, but they did say for sure it will only be one, right? So one of Galaxy or Whabouchi is going to be mothballed and one is going to progress. I would bet that Galaxy would be the one selected because it's bigger, even though Galaxy or Whabouchi was the one that they modeled or used for the hydroxide plant. But beyond that, it was very much a brine-focused kind of strategy. They're planning to grow 75,000 capacity today toward 200,000 by 2028. That's capacity. They kind of indicated production run rate at that level would be by 2030. But this is below Arcadium's previous outline of 225,000. Rahul Anand of Morgan Stanley kind of asked that question and noted that Arcadium had talked about 225. And of that additional tonnage, 85,000 will be in Argentina and 40,000 will be Quebec. They're spending $1 billion per year for each of the next 3 years based on projects that are already in train. And the capital intensity of these projects and their C1 cost is high, relatively high, $65 a kilo, and $5 to $8 a kilo, C1 cost for the Brines portfolio, but they're including the acquisition cost and assumed debt in those numbers. When you look at what they were forecasting for the future, they see scope to grow from 200,000 tons in 2028 to 470 to 520,000 tons by 2035 from their portfolio of what they call options, which are their various brownfield and greenfield projects, of which they said in order, the first is Argentina can grow 110,000, Canada another 60,000, and then Chile, subject to studies, because they haven't done a lot of work on those, another 100 to 150,000 tons. But their targeted capital intensity is significantly lower there at $30,000 or $30 a kilo. And they expect within 30 months of making an FID to bring these, tons into production. And they were calling for $5 a kg C1 cost compared to 5 to 8 across their Brines portfolio. And that will give them a 15% IRR. So anyway, that's their portfolio, their strategy. They're hosting a lithium-specific site visit in Argentina next week, highlighting, among other things, their DLE tech. And the guy presenting this, their new CEO, he's the CEO of aluminum now and lithium, right? And this is like a big change because originally they kept Paul Graves and they said, lithium is going to be kind of like a separate business. Now they've merged it with aluminum and they combined it with aluminum. They said because there's a similar amount of processing, in the end product. So Rio is exiting from Quebec, their borates and titanium business, but they're keeping their aluminum business. So again, I'm making, that's good news for all of us who care about having North America conversion from hard rock. There was a question, so there was some speculation that they, after exiting Yadar, they might exit all of Quebec. So they're not doing that. But lithium is clearly one of their 4 core pillars, alongside iron ore, copper, and aluminum. It is higher EBITDA expected by 2028 at 37% than aluminum, which is forecast to be 27%, but is significantly lower than iron ore at 66% and copper at 57%. So I've been thinking, I've made an analogy of lithium to iron ore, and a lot of people, believe lithium's like iron ore, but Rio seems to be arguing it's more like aluminum. Though they do flag, hard rock supply as being one key area to monitor. I'll leave that summary. You could feel free to look at that tweet, and we'll put up some of the slides that I just referenced alongside this.
I would just maybe a few comments off the back of that soliloquy. I think that what's very interesting, I mean, first of all, the analogy between lithium and iron ore. I mean, for me, that's always been an analogy between spodumene and iron ore, which I don't believe it is a correct analogy anyway. But yeah, I mean, I think the fact that they are sort of equating lithium with aluminium is a very interesting sort of analogy, because from their point of view, looking at it from an upstream commodity standpoint, they are quite right. Both of them need more processing than, for instance, just whacking your copper through a concentrator and then sending it out to somebody else's smelting business, or shipping your iron ore and sending it off to a steel business. So both of them are sort of further downstream businesses. However much we would say that we regard sort of lithium as more a spec chemical business, and I guess we'll find that out over time, whether Rio is able to operate as well in the spec chemical business as they are in the commodity aluminium business. I think the other really interesting takeaway is in terms of how they are framing their expansion plans. So clearly very much of the expansion focuses on Argentina and the DLE projects in Argentina. Obviously, they keep one of the hard rock projects in Canada, and keep the refinery, which is obviously positive from the point of view of Quebec and hard rock. But it comes out quite strongly that they potentially see Chile as an emerging sort of opportunity. And I would suggest probably the reason that the cost base in Chile is going to be lower than Argentina is they don't need to use DLE to the same extent in Chile. And I think that's going to help them. And I think what's really interesting is that they obviously bought Arcadium, they bought the Arcadium assets, and then they went out and bought those Chile assets, which was a bit of a surprise to people in the industry. But maybe it shouldn't have been, because it sort of comes back to the way that Rio run their businesses, which is that they want to be in the lowest quartile operations on the cost curve. And obviously Brine and DLE Salar Brine is the lowest quartile of the cost curve. So they want to be profitable through the cycle. And I think realistically, that's going to mean 90% or 80% of their business being in Salar Brine going forward.
We shall see on the Chile side. Chile is a very particular country as it pertains in how they think about lithium. So it's a challenged jurisdiction in a lot of ways for beyond SQM and Albemarle. I mean, who have great assets, but also the government, sticks their fingers in their pies a lot. So I just actually called up a LinkedIn post by Jérôme Pécresse, that's the chief executive of aluminum and lithium for Rio Tinto, who last week I had the pleasure of visiting Nemaska Lithium's construction site. So that's a long time after the acquisition for him to be visiting, the Nemaska site. So he said positive things there, that they have like 2,000 employees. A question I have is, and we can now turn this to kind of like to QTWO and to PMET and other very large assets that some have speculated that, Rio will, maybe replace some of it. If they are committed to Quebec, they may make an acquisition of something of world-class size and grade in the region. I don't know it's too early to kind of talk about that. Clearly South America is a focus, but I would question if you look at their outline, everything about Chile is like understudy. Chile had, these great, I don't know, there's change in politics and other things. I think Chile is a question mark and Quebec is a question mark. They're very committed to growing Argentina, significantly. And we'll see how the Chile versus Quebec thing unfolds over time. And it'll also be market dependent, right? The politics in the US and elsewhere and how fast the North American market grows. Is it hydroxide versus carbonate? But let's talk a little bit about Q2, which had this spectacular drill results, and just in general, the Quebec, I don't know what you think Rio might do in Quebec elsewhere. Right?
Well, I think, first up, wow, what an amazing hole. And not really a director's hole either. I think that's the biggest tons and grade or intercepting grade that I've seen in pegmatite while I've been watching it. So absolutely, amazing hole. And if I was an acquirer, certainly the Cisco project ticks a lot of the boxes that I'd be looking for in spodumene. From my point of view, some of the things that stand out about the Cisco project is obviously the proximity to infrastructure, much closer to the train line than all of the projects in the northern part of Quebec. Obviously, the massive nature of the ore body. And that's really important because I think one of the things that lots of people don't understand is most pegmatite bodies may be sort of stacked operations, and with stacked operations you get contact zones, and in contact zones you have higher iron, you have smaller crystals, and you get much lower recovery and processing. But if you've got one massive ore body that stretches like 400 meters or something, you don't get contact zones to the same extent, so you don't have recovery losses in those contact zones. So that's really relevant from the point of view of processing a hard rock ore body, and that's one of the reasons that we're so excited about this intercept. It's also quite shallow, and from what we can gather from the mineralogy, and obviously we are very early days in terms of mineralogical tests, we've only had a couple of cores being tested. We need to see much larger samples come out, but the initial tests were indicated that the ore body is suitable for DMS, which is obviously a crush rather than a grind. So that has implications in terms of the work rate, in terms of the power cost, in terms of the processing cost of the project. So, there are many things that set the Cisco project apart from other projects, either in that area or in other areas. And it's going to be really interesting over time to see as we start to get answers to more of the sort of questions that we have for the project.
Great, thanks for that. And just thinking about like that, the 1-to-1 and this, the video that will follow here. There was NOA Lithium, which is both Q2 and NOA are clients of RK Equities. But NOA is an Argentine brine, and you look at the excitement of Rio, there, and so they just completed a financing. So there seems to be a lot of scarcity of available brines that are not like in a portfolio like Rio's.
Yeah, well, and also, obviously we've seen Rio being an acquirer of Argentinian brines. Has its own operations, excitement there. We've sort of seen the Eramet DLE project, which is also in Argentina. We've seen Ganfeng and the Chinese be acquisitional and also operate in Argentina. And then over the last couple of weeks, we've also seen Liontown Management indicate that it is potentially looking at brine acquisitions as well. So, I've written in my blog about how I see, how I believe that brines look significantly undervalued, or brine assets at the moment look significantly undervalued in the market. And I think some sort of companies in the space have indicated that they see them as strategic assets. And let's be realistic, there aren't that many standalone brine assets around. So, we could start to see a sort of scarcity factor in terms of valuation. And obviously, not investment advice, do your own research. But for me, I do see brine assets looking pretty undervalued in the market at the moment.
Oh, great. So So we talked about Argentina and Quebec and Chile. Let's talk about Europe, right? Because there was major major news in Europe in the last couple of weeks. So firstly, we interviewed Keith Coughlin of EMH Holdings, which has the Sinovac deposit in the Czech Republic, having received 360 million euro grant. I won't belabor that point, but would encourage all our viewers here to check out that video, because that is a very significant development for that project. But a couple of days later, Vulcan, a brine project, a DLE, a geothermal brine, just fully funded themselves. You talk about brines being undervalued. Those are conventional brines in Argentina. We've argued that, DLE brine, Vulcan, and some others have very high valuations. They took a very big hit. The stock was down 30% because there was a very large equity component at a very big discount at $4 as part of their fully funding package. But I tweeted that, it's very impressive that the market, or they got fully funded, right? Including with, I think, 54 or 55% debt to equity. And the debt included, a syndicate led by the European Investment Bank. It also included an equity check from Germany's KfW. I think Keith Coughlin mentioned both Germany and France have now equity funds focused on critical minerals. So I think this was the first equity check written, by KfW. And some of their operating partners, EPCM groups, I think Hawke, wrote a check at project level. I think in addition to there was some parent level interest. So there's a very, very large, very high capital intensity. I mean, it's only 21,000 or 24,000 tons of hydroxide. You look at Rio saying we're paying $65 a ton per kilo, $65 a kilo capital intensity for things that they acquired with Arcadium, but in future they want to be like at 35. This was $100,000 per ton capital intensity. So what do you think about, but Europe is getting their act together, right? They think that we need supply, and so we've talked about they only write directives, they don't write checks. Now they're starting to write checks.
Yeah. I mean, I think the big issue in Europe is we just don't have the resource base that you've got in a lot of regions. So obviously in Latin America, you've got the salar brines, you've got the big spodumene projects. Nobody's really found any substantial spodumene projects in Europe. There's obviously the Keliber project in Finland. That's a tiddler. There's the hard rock projects on the Germany-Austrian border, Czech Republic, etc. But there aren't any sort of big there's the projects in Portugal as well. But at this stage, there aren't any big what I would call world scale projects like you get in Western Australia or Canada or Latin America. And obviously the EU also has this focus on sort of low carbon projects, and the Vulcan projects appears to tick all those boxes. It's geothermal power, and it's DLE production from geothermal. So I think I personally am not a major fan of the project, but great that it's got funded. Good for the industry that it's got funded, and fingers crossed they can get it into production without any major sort of hurdles or slip ups.
Well, now that's the key, right? They were delayed in making this final investment decision, so I think they pushed out by a year their expectation of phase one. But I see like European Metals Holdings as maybe like 1 year behind the ability to make the final investment decision. So Europe is, the CRMA has happened. They've labeled a couple of strategic projects. Yadar was one that's being mothballed, even though that wasn't the EU. But a lot of the projects in Europe that were critical minerals, strategic projects in lithium were mostly refining. Very few had kind of the upstream. So Anyway,
I mean,
EMH.
what's very interesting in Europe is that we don't have world-class and world-scale lithium projects, but we have got some really interesting sort of battery materials projects. So we've got some really interesting graphite projects in the Nordic region. We've got a high-purity manganese project in the Czech Republic. We've got other projects elsewhere. There's some really interesting cathode projects. So it would be nice to see some funds go into those areas as well, and not just into bog standard lithium, if the EU is serious about building its own supply chains.
Right. And another thing, there is Umicore as cathode maker, BASF, but the Chinese have also been welcomed. CATL and Stellantis had a ribbon cutting for their battery plant in Spain, and BYD is a huge investor in Hungary. So, I think the Chinese, whereas I'm hoping for a grand bargain with the U.S., I think Europe is open to be partnering with China, possibly for upstream. So let's switch topics. I listened to Foreign Policy had an interview with Grace Beskarian at the Center for Strategic and International Studies. I listen to her often, but it just reminded that the headline was, "Is Trump's foreign policy being driven by critical minerals?" So I'd encourage our viewers, I focus very much, as you know, on what's happening in Washington, D.C. I see another check was approved for ReElement, which we had referenced, and Vulcan, not Vulcan Resources, but Vulcan Element, which was tied to rare earths. But Grace mentioned something which I think you picked up on when MP did their original deal with the Department of Defense. It was all focused on like light rare earths, but she mentioned that America is still very short on the heavy rare earths side. And good friend of ours, Todd Hannigan, he's the chairman of Hyperion X, kind of tweeted, what's rare is actually DYTB, not so much NdPr. So and he was referencing Hyperion X as well as Brazil rare earths as obviously having those heavies. So your thoughts, just some comments on rare earths, and then let's cover silver as well, because I know you're loving silver.
Yeah, I mean, it's been a recurring theme all the way through that, rare earths aren't rare. Economically extractable deposits of rare earths are pretty rare, and economically extractable deposits of heavy rare earths are exceedingly rare. And as it stands at the moment, there isn't a hell of a lot of advanced projects in the continental United States that have a large concentration of heavy rare earths in them. There's obviously the iron absorption clay projects in Brazil, which look very interesting. There are some early stage projects in the US which potentially are interesting. So I think that's an area that we've got to focus on. The other area we've really got to focus on is the processing side. I think there's this perception in the industry or in the investment world that you fund these processing projects and then they build them and turn them on and it's absolutely fine. But it's not like an iPod plant. The processing side of rare earths, it can take 2, 3, 4 years to ramp up to spec and to ramp up to volume. You only need to have a look at the lithium hydroxide refineries in Western Australia to know how difficult it can be to ramp up to spec and to volume on some of these processing high purity products. So it's not like, the plant gets constructed and it comes in at 90 to 100% capacity utilization, producing perfect product. It could take 3 or 4 years still for this product to ramp up. So I think we have to be realistic that unfortunately we're going to be dependent on Chinese supply chains for a lot longer. And one of the things that really stood out for me after the, should we call it the rapprochement between the Trump administration and China in October, is that stock prices for a lot of these rare critical minerals stocks absolutely slumped, as if to say, well, the US and China are happy and, there's no more risk in a critical mineral supply chain. Well, newsflash, the agreement between the US and China is only for a year, so it's only kicking the can down the road for a year, and really it hasn't fixed the overriding problem, which is that the US doesn't like the fact that China controls 90% of the supply chain in these commodities, in these products. So we still need to finance the development of these Western supply chains, and we still need to build these new projects, and that means that these Western projects or projects controlled by Western companies are just as valuable as they were, in my view, before the agreement between the US and China in October. It's just that the equity market doesn't agree. So there is a little bit of an issue there, and I think it's a really, really interesting sort of buying opportunity for some of these stocks.
Oh, great. I listened to, just to change topic briefly from rare earths to silver. I listened to Benchmark hosted a seminar with Iola Hughes, led by Iola Hughes and her colleagues, about the best markets, and just flagging how it is a big competition. America is kind of catching up, right? Or not. I mean, China's way ahead, but U.S. is a very substantial market, with California, Texas, Arizona, Nevada, and New Mexico being the biggest states for that.
This is in BESS, yeah?
This is BESS, yeah.
Yeah.
And BESS is tied to solar, right? In those, and wind, in those states. And you've argued that silver is important because of solar.
Yeah, I mean, I stand by that. I think that solar installation forecasts are way too low over the next 5 to 10 years or so, and that obviously has big implications for BESS demand, but it also has very substantial implications for silver demand. And we're starting to see some major ructions starting to take place in the silver market now. We've seen this new Chinese legislation come out, which basically bans silver exports from China. We're seeing very strong physical demand from both India and China. And we're starting to see a disconnect between physical markets and the paper markets. One of these things that I've touched on a few times in the past and written about in my blog is that the material that sits on the LBMA, the London bullion market, is not all free float material. A lot of that is tied up in ETFs, and the free float on the London bullion market has fallen very, very substantially over the last sort of 6 to 12 months. The inventories of physical silver in China are absolutely collapsing, and the COMEX inventories have been falling as well over time. So we are looking at a situation where we're seeing quite a substantial physical squeeze in silver, which is not necessarily being appreciated by the paper market, or maybe it is, and there's something dodgy going on there, but we won't go into those sort of conspiracy theories. But certainly there is a physical squeeze in silver that's not being reflected in silver markets, and a number of sort of the technical analysts that I follow are suggesting potentially triple-digit numbers for silver prices going forward. So I think silver is very interesting, and I would urge our listeners to sort of try and come up the knowledge curve on silver, because I think it's going to be a very, very important metal over the next sort of 1 to 2 years or so.
Sounds good. On your recommendation a couple of months ago, I bought the SIL, the ETF, which focuses on silver juniors, to complement my owning the GDX and GDXJ, which owns gold juniors and seniors. And I also have uranium exposure. Actually, I switched it from the Global X to the URNM, because URA has a very large position in Oklo, which is not a uranium producer, but a speculative SMR player. But anyway, I have that exposure. I also have COPX for copper, Copper has been doing well, and I notice, anyway, so these are ways to play that. My only other kind of silver exposure was through a lithium early stage developer, which is Lithium Universe, which has converter plans for carbonate from hard rock in Quebec, but also has pivoted, to silver. So now I have speculative silver exposure through Iggy Tan's LU7, not advice, of course, but we are looking for some interesting silver stories. We met a couple at the 1-to-1 conference, but I haven't done any homework enough yet to speculate on any others. So anyway, with that, Matt, thanks. We'll leave it at that because we have QTWO and NOA Lithium together with Pim Kallisvert. I should mention he was also on the panel, a private equity fund manager in London, and he talks a bit about copper, in that discussion. So I would encourage you to watch that. And before we conclude, just want to thank again our sponsors, USCF Investments, who have been making it easier to get exposure to commodities investments for almost 20 years. USCF Sustainable Battery Metal Strategy Fund, ZSB, is designed to capture investment exposure to metals powering electrification, such as lithium, cobalt, copper, nickel, aluminum, and silver. To learn more, watch our inaugural episode with CEO John Love and visit uscfinvestments.com. And also thanks to Lithium Royalty Corp, which recently published their Q3 results, which demonstrated 86% growth in revenue from last year's third quarter and included a first royalty payment from their 3Q project operated by Zijin Mining in Argentina. To read that press release, visit their website, lithiumroyaltycorp.com, and follow them on X at @lithium_royalty. Have a good weekend, Matt, and to all of our viewers. Gabriel, why don't you just tell us about NOA Lithium and why your previous track record at Lithium Argentina makes you well placed to replicate the success there?
Hello. We're trying in NOA to replicate, our experience in Lithium Americas. My partner also comes with some experience with the lithium space he represented Ganfeng. There is a lot of experience in Argentina in lithium, and we're trying to replicate in NOA. Developing a lithium project is not easy. It's not the same as developing a typical mine. It's more a chemical project rather than a typical copper, as you said. And we have to understand that we are dealing with a chemical. We are talking about brines, not hard rock, but it's a chemical process. At the end of the day, the only thing that we got similar to mine is taking the brine out of the ground. The rest is a chemical process. And so we are trying to bring out their experience from my experience. Putting the Minera XR, that is a joint venture between Ganfeng and Lithium Americas, into NOA. And so far it's been successful, and it took a lot of time, and quite well how long it took to start construction for Minera XR. I think it was more than 10 years. In NOA, we started the company in 2023. We listed the company in 2023. In 1 year, we got a maiden resource. In 2 years and a half, we got a PEA, and we plan next year to get a PFS. And according to our plans, in less than 5 years, we plan to start in construction. That is our timeline. So that is experience that we're trying to bring to NOA. It's not easy, but we believe that the experience that we're bringing from the previous projects in Argentina, the development of projects in Salta is very important to choose the right jurisdiction. It's not the same in Argentina. The resources belong to the provinces. So it's very important to choose the right jurisdiction. It's not the same to build a mine in Salta than in Jujuy or Catamarca. So find the right jurisdiction is very important. So all these ingredients make us believe that we are adding value and trying to replicate what we did in the past.
Okay, thanks for that. And Alicia, you're new to the scene, but Quebec is a lithium producer relatively recently, or in the past, and now we've had the restart. Just tell us about QTWO, and both Alicia is a conventional hard rock story, and Gabriel and NOA is a conventional brine. So yes, it is a chemistry industry or chemical, specialty chemical, but you're not using first of a kind technology. And but for pure mining investors, what Alicia you're doing is drilling holes, and you're pre-resource. And Pim, you look for, I guess, beyond the exploration to kind of bring things into production. A lot of money is made at the drill bit, as Robert Friedland taught me, and that's where QTWO is currently at. So yeah, go ahead.
Yeah, for sure. So we have the Cisco Lithium project in Quebec, and if you told me a year ago when we first acquired the project that we were going to be sitting here on a panel, I would have said you're kidding. But it's been a quick year and a half since we acquired it. It's proving up to be quite a large mineral resource, which we are currently drilling towards, and it's been a very quick process. Like you were trying to get a resource on it within the next couple months here, and then straight into PEA, and then see where that takes us. So fortunately for us, again, jurisdiction, we're in Quebec, and that's a very proactive mining jurisdiction. And, the governments of Canada and Quebec are both talking the talk right now about putting more money into critical minerals to be onshoring it and to develop more of the North American supply chain. So hopefully that bodes well for us as we move it forward.
So I want to talk about the geopolitics a bit, and the country specific. A couple of days ago, America and Argentina signed a framework agreement, and that follows a framework agreement that America signed with Australia, and then also separately with Japan. I was speaking with somebody or listening to a podcast or something that's basically saying Quebec is the easiest, and that's going to be the last. Going down the list, and for whatever reason, there is a lot of back and forth between Trump and Canada, but you do have a new prime minister, so that was also something that took place this year. But I guess, Pim, how do you think of, like, a lot of investing these days is what companies are going to get, like, kind of U.S. backing, right? And it's influencing, the stock valuation. So how do you think about that component? And I know you're an investor, not a trader, but
yeah, that was going to be my first comment. I think where I, as an investor, see the true value is not so much in the capital getting allocated by state enterprises, and I think in both cases, this is very, very true, be it Argentina or indeed Quebec. It is how governments have woken up and realized that besides capital, permitting is another huge hurdle. And I remember sitting at this same panel in the other room 2 years ago saying, permitting is the one thing that holds this industry back. And I think that is the tangible change that I'm really excited about. The money is welcome, but I think there is a lot of private capital available and public capital available if you can show a pathway through permitting. And that's the real change in tone that I feel will set this up, not for a small success, but for a long success over a longer period of time rather than to something that is flavor of the month, and then people move on. So that's the one bit that I'm very excited about, and that cuts across all the jurisdictions you've discussed.
Okay. Gabriel, do you want to talk about Argentina and U.S. politics, Malay, and what's going on there?
I believe that we receive a strong support from the U.S. in the recent weeks, months. I think that that is going to be very good for the country. We still got a lot of things to do in terms of, in general terms. The next two big things that are going to happen in Argentina is the labor and tax reforms. That is going to be transformational for Argentina. But in general terms, what we are seeing in Argentina, that is some change in the mining space. Big players coming to Argentina. I'm talking about lithium in particular, with Rio Tinto coming to Argentina, but also BHP getting to Argentina. That is, it's very important that BHP announced a return, or at least the return to Argentina, but also Glencore announcing that there's going to invest 13 billion in Argentina. So mining is becoming very important in Argentina. Now we have to see if the U.S. is really doing something. The U.S. is lagging in terms of investment in Argentina. I'm talking about lithium in particular. China is leading the effort in Argentina with a lot of investment. So we have to see if they're really, with these agreements, with this support, the U.S. is now really trying to do something in Argentina.
Okay, I mean, my observation is that the U.S. has definitely woken up. I mean, under Trump 1, he made some permitting reform. Then under Biden, it was all about EVs and climate. And now, she, rattling the saber a second time, and the rare earths on October 9th has really, other commentators, and I agree with this, basically, pushed a little bit too far, or pushed, overplayed the hand. But what it's done is it has catalyzed, again, this warp speed, America, very focused. They just signed an agreement, for a tungsten mine in Kazakhstan, which was widely sought after by China. So to your point, Gabriel, that China has been very active in Argentina, the fact that they just signed this kind of framework agreement is part of this whole of government warp speed. You're going to see it's an American Belt and Road. They're meeting China in a lot of these places. But one place where China has been less welcome in recent years has been Canada. So any comments you could make about the political environment, Alicia? Just from Canada, U.S., yes, you're very proximate here. One thing I would say, actually, before you answer that, is one thing that I've seen, or haven't seen so much of, but I'm hearing you're going to hear a lot more of from the Trump administration, is being pro-batteries, right? Because they've been anti-solar, they've been anti-wind, they've been anti-EVs, but they're realizing that to win the AI race, behind the scenes, you're going to hear more about batteries coming from the government, and therefore the need for lithium. And then I think you're going to start seeing that, plus a warming toward Canada. I put a joke. I created a meme in ChatGPT that showed Trump and Carney, doing a Trump dance, under the USMCA instead of the YMCA. But anyway, that's just my comment. But Alicia, any thoughts on that from your perspective?
Well, I think the more that you use ChatGPT, the more AI is involved and the more battery storage systems that you're going to need, because You need the battery power to power the data centers, to power all the things that are electrified now. So yes, Canada is ex-China. We don't take any investments from China, which then opens the door to the States, to Australia, to other jurisdictions to invest in us, especially in spodumene lithium. Like, there's all sorts of Australian interest in the deposits in Quebec. Where that goes, to be determined. I mean, Carney talks a talk, and one of his election platforms was reforming permitting. To be determined how that ends up playing out. But I think the more focus there is on mining in Canada, the more there is on critical minerals and just opening up mines, making it easier, streamlining it. Anything you can do to get access to those minerals easier is to everybody's benefit, really.
Pim, do you cover Rio Tinto much?
No, I don't. I do not.
Okay, I'm just because they made a big investment in lithium, and December 4th, the new CEO is going to be, or new CEO is going to be articulating his strategy, and there's some speculation as to what he's going to say vis-a-vis his lithium business, which is in both Argentina and in Quebec. So, all right, you have no opinion on that, I guess.
And it was in Serbia until they got put to care and maintenance.
Yeah,
yes.
they canceled. Yes, they canceled that. Okay. Anything else you'd like to talk about, Pim, just more broadly? I know this is, someone was saying like gold is a critical mineral, but on one of the earlier panels, and I was kind of thinking like, well, you know, the U.S. just expanded by 10 metals from 50 to 60, you know, and they included silver and met coal. So I was just like, you know, if everything's critical, then nothing is critical. But
yeah,
what do you think?
The most critical one to me that cuts across all those mega trends that you've mentioned, be it defense, be it the electrification, robotics, space exploration. There's a new one that I heard the other day. It is all requiring copper, and whether that copper is generated by solar or wind or otherwise, it's still, the electricity is generated via solar, wind, or conventional. It all needs to go over the same copper wire. So that's the one that, you know, I can see benefit from these series of mega trends. And then certainly for pockets where people are willing to invest in creating an eco-center, like in Quebec, where they will create a critical minerals hub in
Bécancour.
Thank you. Places like that are forward-looking, that are looking through the vertical integration and creating a whole see-through system, I think are standing to benefit and can stand on their own legs, notwithstanding what you say about how close it is to the US. I think they're very smart in making sure that they are open to, but not dependent on. The same you see happening in Australia with Enetabe and the lithium refineries that they're building there. So I think countries are really looking at where their strengths are and exploiting those. But within those, if it's not on the basis of that, then I think copper is a great way to get exposure to it without, you know, being pigeonholed into one segment of the critical minerals.
Which copper companies is Hawke's invested in?
We're invested in AIC Mines, amongst others. Yeah.
AIC Mines. Okay.
Yeah.
And
it's a
that's
copper producer.
Australian listed.
It's an Australian copper producer that is doubling its throughput, putting a second mine into construction to feed that. So that's been one of our investments. For completeness sake, we have a joint venture with Wesfarmers in lithium. So we are exposed to lithium in Australia, and Wesfarmers to us is a great partner. They discovered Mount Holland, as I'm sure you know, and running various lithium processing plants. So again, we feel that is a great way of getting exposure to the sector. So that's how we look at the world.
How does that joint venture work? Because Wesfarmers bought Mount Holland, or bought Kidman Resources, which own?
They have a joint venture whereby any of the lithium that they find on our ground, they get to prove it up through to feasibility study, at which point, we have a choice whether we want to keep going or sell it to them.
Okay. That joint venture is through AIC or through a separate
That's
company?
a separate entity.
Okay, that's a private entity? Okay.
Yes.
Okay, great. Always learn something new. So I had no idea you had some early stage lithium exposure. Okay, interesting. Okay, Gabriel, so you just published a PEA. Why don't you tell us a little bit about that PEA and what the path is, from here to get that financed or advanced and financed?
Yeah, we just announced a PEA a few weeks ago. It's based on 2 stages of 20,000 tons each for a total of 40,000. The fact that we got almost 5 million tons LCE with 525 milligrams per liter concentration allow us to get the PEA based on evaporation, minimizing the risk for the development of the project. So allow us to have a low capex and low opex, and both capex for the first stage is $700 million and opex below $6,000, and for the full 40,000 we are talking about 1.3 billion and $5,500 for the opex. And very robust economics with the 2 billion NPV and 3.7 respectively for 20,000 and 40,000, and IRR 27 and 28%. So we believe that we got a very good project for its development. There are not many projects still outstanding or undeveloped without royalties and offtakes, at least in the brine space. And our plan is to take it to PFS. The idea is to get this project in PFS next year and continue its development. The project should be in production, at least if everything goes well, in production in 2030.
Okay, and you just raised $4 million, and what's your market cap?
Our current market cap is a little bit below 60 million. We're currently raising capital, and that's why we're a little bit below 60 million Canadian.
And Alicia, you raised some capital over the summer. Why don't you tell us about that and your market cap and the path from here?
We issued an exploration target on the Cisco project in July, and that gave a conceptual estimate of 250 million tons at a minimum to a maximum of 329 million tons at that Cisco mineralized zone. So on the low end, that would put us, I think it's the 6th largest hard rock deposit worldwide. And off the back of that, we raised $26 million of charity flow-through funds in Quebec specifically. So that $26 million allowed us to ramp up pretty aggressively. So now we have 4 drill rigs turning, and again, drilling towards the inferred resource, which is going to come out in the first quarter of 2026. So it's allowing us to get aggressive with what we're doing to hopefully catch the tailwind of this increase in the lithium space right now, which is, hopefully going to be the next big run up.
And your market cap today, you're at a 52-week high-ish.
220 million, I think. Yeah.
220 million. Okay. Pim, do you look at prices, or do you have price forecasts? Any sense of the lithium market? It's woken up a bit. I have some views, but I was just curious if you had any thoughts there.
We look at costs as opposed to prices. We want to make sure that a project has a cost profile that it can withstand adverse commodity prices for a period of time. But really the value is generated in, assuming that that is the case, the value is generated in taking a pre-production asset and putting it in production. I mean, 60 million market cap against a multi-billion-dollar MPV. If you can take a company on a journey to get it to execute well, there's your prize. And if you make sure that the cost profile is such, and it sounded like it is, that it can withstand a subdued commodity price environment, you'll still make a very good amount of money, and you might make a great amount of money if you get a tailwind. But even in a headwind, you ought to be able to make not percentages of your money, but multiples of your money. And the same goes with the Q2 project. So focus is on price and having a project that's robust enough that it can be put into production without banking on high commodity prices and the project only working in that concept. So we kind of turn it around and have the eyes on the prize, which is, let's look at what this could be worth when you execute well. That's the price.
Okay. Well, Gabriel said he's raising some capital, so if you think he's low on the cost curve and can kind of survive.
We'll grab him afterwards.
Okay.
Yeah.
Any other metal other than lithium that, Pim, besides copper, that interests you?
It's really about the discount that a pre-production asset trades at that we're trying to capture, and you can play that in a variety of commodities. We also have, as you pointed out, gold exposure, and again, there the same thematic still holds at current prices. As long as you have a project with a robust cost position, you can still see how you can make multiples your money. So I wouldn't say we're completely agnostic, but it doesn't rank at the top, and it doesn't dictate how we invest our capital. The transparency of the end market is a lot more important, as I hoped I clarified, as opposed to the actual commodity. We're not good macro commodity pickers. I've never been. You know that pretty better than most. But capturing the value is still possible, even if you don't focus at the right commodity at the right time, provided you back the right project with a good cost profile.
So I asked you on your copper investments, what gold investments do you have?
We have several. We have a group called Orabanda Mining, and then we have one of the most exciting ones that's actually present here called Rox Resources. They just finalized their construction race, and they're building a mine now, and that should still be a very, very good investment for anyone that's looking to deploy capital.
Okay, I'll look at both of those, and all of you just write down, what Hawke's Point. So Hawke's Point's been, you've been around for, 10 years or so?
Yes, we have, yes.
Okay, and you're just one fund, or have you on multiple funds?
We invest out of a single investment, so it's not set up as a fund per se. It's set up as a how do I best describe this? It's almost a
you recycle the capital. You don't just
correct
use it and then give it back to LP.
And there's one single capital provider, so there's not a bespoke fund in the way that some of our peers might have.
Okay, so Gabriel, you've been through a bunch of lithium cycles. It looks like we're well bid here for lithium. That could be just seasonal. I don't know. Any views that, I don't want to impart my views. We have, you could watch Rockstock Channel and hear our analyst views all the time. But you have gone through a few cycles here when you were at Lithium Argentina and Lithium Americas. So what do you make as the state of the market, pricing-wise?
I mean, price-wise, I don't know exactly, but I believe that this is not sustainable. We discussed this at length. I believe that this recovery will continue. I believe that this is going to be sooner rather than later. What is going to be the price? I truly don't know, but this should be long term, should be somewhere between 20 and 30. It doesn't make any sense to go back to the 70s and 80s. But with this level of prices, none of the projects are going to be financed, so there's not going to be projects in the pipeline. So the supply is going to be shorter. The gap in the supply and demand is going to be bigger. So there's going to be there should be an increase in the price. Otherwise, the deficit is going to be much higher. So I do believe that this recovery should continue this increase to a level that is it could be sustainable for the markets, especially with this growth that we see on the ESS. That everybody's going to be talking about ESS, no longer about DB.
Yeah. One thing I should point out is that Argentina has been probably the most prolific area for M&A in the lithium sector. So there have been lots of acquisitions. I mentioned POSCO for Lithium South. That's probably like the smallest one. But from Ganfeng joint venturing, from Rio Tinto buying all of Arcadium, principally for the Argentine assets. But there have been a lot of smaller M&A. Lithium Americas bought Millennial Lithium for $400 million. So the path from like a 60 million market cap company to a potential takeout at $250, $400, $500 million. NEO Lithium got bought. Rio Tinto bought Rincon. Argentina, in my opinion, is just like underappreciated from what Malay has done. Argentine stocks have done well, but Argentine lithium stocks have not done so well. But in Alicia's case, the stock has woken up in the last number of months. So we interviewed you multiple times this year, but I remember we started the year in January at the Vancouver Resource Investment Conference, and it was quite bearish, and it was bearish all the way until June. But since you put out that exploration target, lithium prices have also started to rise slowly, but now more fastly, more quickly.
More quickly, yeah. I mean, acquiring an asset and drilling it and seeing what was actually there in a counter-cyclical market. I mean, much to the detriment of our shareholders, when I first announced that we were acquiring the Cisco deposit, they all questioned if I was sane or not because of the market at that point. But now they're quite happy. So I can't, they're not going to complain too much these days. But yeah, it's, you ask 5 different people and you get 5 different answers on when the market's going to turn. And I think everybody knows it's going to turn. It's just a matter of when. And I think it's going to be sooner than not, same as you. Like, you can't electrify as much as you're doing. You can't have solar coming online. You can't have all the AI without having the storage systems. So it's going to happen sooner than not, I think.
But you bring up a really good, you're reminding me of a very good point. You actually purchased this asset, right? So just buying well, right? Like this is a very large discovery. And a lot of lithium, like 5 years ago, 10 years ago, when I started in lithium, there were just like 4 or 5 projects. But through the booms, a lot of exploration happened, and there was a lot of Australians that came into, Quebec, and a lot of people didn't find anything. But you bought something, you drilled it, and it's become a really major discovery. So how did that acquisition, it means to make money, like when everyone's chasing the stuff, not everyone finds something like you have.
Fortunate. In the right place at the right time. I don't know. We had another lithium project to the north of us back in the 2022, 2023 when everybody was getting into lithium. And not many of those projects survived because they didn't have anything substantial. And that was our first project. It has lithium, but it's not going to make the cut in a bad lithium market. You need to have your costs down. And Cisco came along and we decided to take a flyer at it, and sure enough, it turned out to be a good bet.
And you have good geologists behind you as well who have scoured all of Quebec, and so having good geologists and having some luck and purchasing well in a counter-cyclical way is a means to make money. And you did something similar. You started the company only in 2023, and you thought that like all all the lithium brines have already been discovered, but you actually have one of the highest grades out there. Like all the best things were picked off, we thought.
Yeah, we were lucky. And again, we took advantage of the experience that we got in the lithium space. Most of the salars or properties within salar were taken, and we tried to secure properties on the alluvial areas of the salar, trying to use the experience of other projects that were exploring in the alluvial areas. And again, in 2022, where everybody was trying to search for properties that were not many, we were able to secure 140,000 hectares and put 3 projects in Argentina.
So I've been here a number of years, and I've watched ebb and flow of attendance and interest, and I would rate the interest and the people here as being relatively low, moderate to low, which is a very good contrarian indicator side for the bull market for lithium to come, because when it was filled, it was more like the top of the market. So take that, pay attention, because, you know, gold is hot, copper is hot, other things are hot. Lithium is warm, getting warmer, and a bull market's coming. And these are 2 very good projects that PIM is, you know, maybe going to invest in one or both of them. We'll see. Thanks very much, Gabriel, Pim, and Alicia.